We're so excited to have our first external guest in our biweekly webinar. We have the Polygon Foundation with us today. So we have Colin, the global head of institutional capital, alongside Matt, part of the research team. We're super excited to talk about tokenization. And most importantly, Polygon has an exciting announcement a couple of weeks ago about Polygon 2.0, their roadmap and what they are going to do with the whole architecture and the token as well with MATIC, and how this is going to galvanize an entirely new ecosystem that basically would interoperate with one another to onboard billions of people in the future with Web3. And we're super excited to talk to you guys. We want to pick up your brains. So let's start with a round of introduction. So why don't you start with you, Matt? Tell us more about you, what you do at Polygon. And most importantly, that's one of the questions I like to ask to everyone here is, how did you get started into crypto? What was the trigger?
Thanks. Yeah. So just a bit of background. So I spent 5 years in traditional finance as a quant at a couple of different hedge funds in the equities space. And back in, I guess, 2016, 17, living in San Francisco, everybody was talking about Bitcoin. And it was like the future was revealed to all of us. If you were paying attention at that point, the whole world was trending toward decentralization. And it was all about peer-to-peer transactions. It was about how do we make sure that this technology can scale for the future. There was a little bit of a Bitcoin Cash side quest on that one. And what started to become clear was that like this technology is going to be useful for a plethora of use cases, right? And the whole world was going to be functioning on a decentralized internet, very different from how we see it today. And the amount of like value unlock that I could see working in traditional finance, where you disintermediate like the middle person, right? You can truly go peer-to-peer. You can have like true global 24/7, like efficient markets, just absolutely fascinated me. And I stuck around, paid a little bit of attention during the last bear market, 2018, 19. And then in 2021, I started to realize that, okay, like this technology is hitting a pivot. It's hitting like a turning point where mass adoption is truly coming. And so I decided I had to quit my job in traditional finance and make my mother very scared and take a foray into this big, beautiful, decentralized world. So I've been full-time at Polygon since about a year ago, and I'm on the institutional team. So I'm like the technical guy on the team, which is why I'm more of a researcher than anything. And our mission on the institutional team is really twofold. It's first to improve education in the institutional space, because not everyone's like me, right? There's a lot of people sitting there trying to understand, like, how is this technology going to impact the way that I live and breathe and work? And how can my business take advantage of the new set of opportunities that are out there? So really the first is education. And then the second is for those people that have already started to understand a little bit and they're a little further into their journey, how can they take advantage of the technology? And so it's about adoption too, which is a little bit more of what Colin specializes in. So I guess I'll pass it over to him.
Colin, we definitely want to pick up your brain and learn about your story and how you got into crypto and what you do, most importantly at Polygon. But thank you, Matt, for the great introduction.
Thanks.
Yeah. And by the way, thank you, Eli, for hosting. It's a pleasure to be here. By way of background, I spent about 20 years on Wall Street, mostly in institutional equity sales and trading with a mix of investment banking and ultra high net worth thrown in there. I spent 3 years before Polygon at an AI-focused technology firm. So I've got a little bit of a mix of ingredients that all play into crypto. I now head up the institutional capital team at Polygon, and I've been doing that for a little over a year. What really got me into crypto was one, this idea of alignment, right? You could build a network in which all the players were aligned. Like the classic example is, call it a Facebook, right? There's a bunch of people using Facebook, but they're really not being rewarded as being like a full partner in the network. And that kind of value accrual is like accruing to some kind of guys at the top. So there wasn't alignment. And then you think of all the kind of classic crypto ideas in terms of economic freedom, right? People that don't have access to the economy can now interact in a peer-to-peer permissionless manner and thereby gain a lot of freedom and specifically even freedom from censorship. Matt and I are both based in the US. There's a lot of countries out there where people don't really have the same rights and freedoms, where the government can actually dip into your bank account if they want to. There's different structures of inflation that are really not helpful to the day-to-day individual. And blockchain was a solution to a lot of those challenges that, quite frankly, like the billions of people in the world face. So as I was coming into awareness of this scenario from my traditional finance career, it's almost like the Jeff Bezos moment. I really don't want to compare myself to Jeff Bezos because, full disclosure, there's no comparison there. That dude is the GOAT. But it's the idea that he had, call it in 1996 or somewhere about there, when he was about to leave D.E. Shaw, one of the top hedge funds in the world, to go pursue this idea of the internet. And for those of us that were around back then, man, that was unclear as to how that was going to play out. Like, most people would say, you are out of your mind. But he had this idea that the internet and the opportunities that would be available within that subset of ideas would be wider than the Amazon. I think that's kind of the story behind the Amazon name. I came to the conclusion that crypto, and blockchain specifically, was very similar in that, from my perspective, it would completely rewire the global financial system. And since I've been at Polygon, that thesis is completely playing out every single day in my role. It's happening at a pace that is much, much faster than I think a lot of people see. And we'll get into that in more detail over the course of this call.
No, absolutely. It's always fascinating to hear the different stories that people got into crypto, because that really translates into the passion, the drive, and how they basically want to leverage the technology for multiple use cases. And I think a lot of people got the confusion that cryptocurrencies or even blockchain technology and different blockchain platforms are equally the same. And that's why at 21Shares, we basically launched the global classification standard with CoinGecko to really make sure that the investors and the regulators can actually see that there are some clear distinction here, as we've seen in the stock market as well. Back then, in the late 1990s, we had MSCI and POR coming up with GICS that basically led to anyone being able to map out the entire asset class. So Polygon is very different from Bitcoin. And I'm sure a lot of people in the audience actually know a lot about Bitcoin, know a lot about potentially Polygon to some extent. Colin, can you tell us more about, first, what is Polygon? And then most importantly, tell us more about why Polygon is a very exciting platform right now. And to give a number to the audience here, Polygon has experienced a 300% growth year over year last year, with a number of new developers and smart contracts built on top. Polygon has also been able to gather significant institutional adoption. We've seen consumer brands that we all know and love, like Nike, social media platforms such as Reddit, building on top of Polygon. So Colin, tell us more about, first, what is Polygon, and part of your job, how do you approach institutional adoption?
Yeah, absolutely. And phenomenal questions. To unpack what you just said, I would start with the idea that, in a nutshell, Polygon is an enabler of cheap and fast Ethereum. So if you think of the idea that Ethereum is by far the most secure blockchain, has by far the most decentralization. The number always changes, but it's probably around 600,000 validators. I really do need to keep up on the number, but extremely decentralized, extremely secure. And Polygon wants to make that a faster experience and a less expensive experience in order to enable adoption. So adoption would be our North Star. We want to build a technology platform that allows the next billion users to onboard to blockchain. If you think about it specifically from the institutional perspective, from the seat where Matt and I sit, that looks like institutions building on Polygon really as a utility. So let's unpack that. What does that mean? To a large degree, that focuses around the idea that you can tokenize various institutional assets, which does three things. It increases revenue, it lowers costs and creates capital efficiency, and it de-risks their platform to some degree. Probably all the people on this call, knowing Wall Street, knowing the level of competition faced by the large investment managers and the biggest banks in the world, it's a knife fight for market share that's taking place at that level. They're looking for any advantage that they can. Blockchain offers an order of magnitude better solution in the three verticals that I just mentioned than prior solutions, which means it's one of those technologies that I think a lot of technologists model almost like a 10-year transition, where you kind of start, think of the idea that there's a picture of New York in 1912, and there's one automobile surrounded by all horses and buggies, right? And then the picture of the same street 10 years later, it's the exact opposite. It's like there's one horse and buggy surrounded by 10 automobiles. I see the parallel between that picture and blockchain to be very similar, where because it is structurally such an impressive improvement upon the prior technology, that the adoption happens with that same kind of level of hockey stick growth. So let me more fully describe those three major reasons why people adopt the technology as a utility, why they build on Polygon as a platform. And we'll start with revenue. If you think of the idea that 𝕋𝕚𝕞𝕖 tokenized on Polygon, what that does for them is it allows them to reduce their costs for entry. So it shifts their mix from only allowing qualified purchasers of $5 million in investable assets or more over to accredited investors or high net worth individuals to start. And of course, we want further democratization, but that's the beginning. And it allows really a new minimum of $10,000 at an investment versus prior minimum of much, much higher. So if you're a big private equity player, and 𝕋𝕚𝕞𝕖 runs almost $1 trillion, it's a large private equity entity, they could say, okay, by now accessing the mass affluent, people with between $1 and $3 million in net worth, you could put a model where you get a double-digit increase in your revenue just expanding your distribution. So for the big players out there, the $1 trillion plus players, they're all facing the same problem as how do you expand your market and how do you grow market share versus competitors? So blockchain is a very powerful solution to the revenue generation side. If you think about the cost savings potential for blockchain, very specifically, if you have a process whereby you issue a traditional asset, right? Say it's a bond, and there's actually, if you unpack it, there's a lot of manual back office work that takes place that involves costs, and ultimately it's very expensive. By removing those multiple parties and taking blockchain as your solution, you take a package where there could be like 3 to 5 to 10 different parties, and you condense it into a stack of essentially 0. It's almost going direct. And thereby you can save costs to the tune of, there's various numbers, but 90 to 95%.
Yep.
The cost savings over time are significant. And if you're talking again about the largest banks in the world or the $1 trillion plus asset managers, it is a massive opportunity for margin expansion. And again, it's a revolutionary shift. Like something like this only comes along, in my view, once every 100 years in terms of a massive structural shift. And then the third silo that I tend to highlight, with recognition that the first two are probably more significant drivers. And by the way, this also signifies why adoption will take place and is taking place regardless of barriers or regulatory environments that are unfriendly. If you think about how powerful those drivers are, in my view, if you understand that, nothing will stop this transition. It's going to take place in non-US geographies. If that's a hindrance, it will take place in the US over time. It is as powerful as the transition from 0 and 1 to the first, call it Web 2, right? Web 1 and Web 2. It's that powerful transition. So to cap off the thought of 3 major drivers, the third would be de-risking of a process. So if you think about the idea that Siemens tokenized 60 million euro on Polygon, you can look this up. The reasons why they stated that they did that publicly was that it took their process from 7 days settlement to 1 day settlement, and therefore de-risked their issuance process. For places in the financial infrastructure where the settlement times are longer, like in some cases, they're like 28 days, and blockchain becomes a solution for that. Wow, there's a lot of, one, also cost savings involved, but 2, tremendous value accrual to the participants in that particular process. Major drivers, very powerful reasons why institutions and the global financial network are coming to this technology. And the interesting part that I want to convey specifically is that this is actually happening at 1,000 miles an hour right now, but it's not talked about because these large regulated institutions don't want to tip their hat before they're ready to reveal the solution. It's a competitive issue and potentially a regulatory issue. They really have to have all their ducks in a row before they can make the public aware that they're preparing to launch these beneficial solutions.
And I think it's a good point that you mentioned when it comes to the accelerating adoption, especially institutional adoption, where they really try to ensure that they keep the secret sauce on the back burner, almost like very secretive until there is essentially a fully fledged plan and product. Tell us more about how do you foresee the accelerated and the rate of adoption for the next 6 to 12 months? Do you see any hurdles on the pathway to billions of people available using crypto and most importantly, all these powered applications on Polygon?
Yeah, absolutely. And I could be wrong, by the way. This is a personal opinion, never investment advice. I personally see the next 6 to 12 months as the hockey stick style adoption for building on blockchain for large institutions. Part of the reason I say that is because institutions that have spent years developing regulator compliant frameworks from which to launch initiatives. And I think one that you should look at as a great example is Franklin Templeton. Probably most of the people know on this call that Franklin Templeton recently tokenized their money market fund Benji on Polygon. That was a process of multiple years. And what I view as a partnership with the regulators, a lot of dialogue as to how to launch something like that in a compliant way. And I think that there's a lot of conversations like that taking place in the background, but it doesn't stop there. I think that there's a big roadmap for these institutions, and they want to understand how they can connect and benefit from some of the cool, interesting crypto native ideas that have sprung up within ecosystems like Polygon, including DeFi, and how to get involved in these faster, cheaper, more efficient settlement structures and things like that. And timing wise, I see that, again, I do see that in the next 6 to 12 months. Where I could be wrong in areas of risk are, as you alluded to, the regulatory environment. In the US, there's a lack of clarity. It's a very challenging environment. But having said that, I still see adoption moving forward because there's a lot you can do that I think is very clear legally within the current regulatory framework that I don't think anyone has a question around. So I do think you still see further adoption in a purely compliant, regulator-friendly manner, irrespective of kind of developments on that front. In the meantime, there are going to be first movers. I would point to the UAE as one. I would point to Singapore as another. I think personally, London and Europe are other jurisdictions where you see a very fertile ground for early adoption. But hopefully that answered your question in a concise way. And I'm happy to unpack any of those ideas as well.
No, absolutely. I think what's fascinating as well is that essentially Polygon, like Ethereum, is almost like a global app store where anyone can build. But it always comes along with local jurisdictions compliance, especially for these large financial institutions. I think what is fascinating is how we're going to see more and more incumbents adopting the technology, while we're going to see more and more blockchain native companies that would be the clear outliers when it comes to the user adoption, the revenue traction, et cetera. Because what we've seen in the early days of the internet is that the most valuable companies are internet native and not essentially this brick and mortar that were part of the larger part of the stock market in the late 1970s, 80s, 90s, et cetera, until we had basically the Amazons and the Facebooks of the world. And I think we're going to see the same pattern as well, built on Polygon or any other smart contract platforms, where essentially some of the most valuable applications or technologies are going to be blockchain native and cannot exist without actually the technology underneath it. And I think that's where you could see the first mover adoption more. And that's why when you look at tokenization today, the product market fit for tokenization is actually fiat currencies with stablecoins. And then that expands to over assets and most importantly over issuers as well, not circles, but like now we have Hamilton Lane, as you mentioned, Siemens and more. And I think this is just the beginning, right? Especially when we look at the adoption of crypto today, just 5% of the world's population that have access to the internet actually poke around with crypto to some extent for the past 14 years. And I think we're going to see more and more of that as well going forward, especially because back in the late 1990s, we had essentially just 5% of the world that had access to the internet when the pages were loading for 5 minutes in order to basically look for information over the internet. Actually, that's one of the reasons I like to compare the early days of the internet with Ethereum and Polygon, because essentially, when people trade on Ethereum, especially at the peak of the last bull market, it was very expensive. And to some extent, because of that, it was extremely slow as well because the network was congested. And Polygon and other solutions came in to provide faster settlement time and efficiency on the back of that. And I think that's fascinating. Now, moving on to Matt and ask, why do developers build on Polygon first compared to any other solutions that are out there, right? So for the audience here, if you want to have an analogy, Ethereum is almost like Fedwire in the US, where you have the settlement happening there on a daily basis, but then you have the layer on top that is more consumer facing, owned by a set of banks or a set of, in that case, applications that do allow you to trade in a more faster manner. And I think this is really the same layer here, where we have basically the settlement layer and then the consumer-facing layer, which is essentially Polygon here in that case, that allow anyone to build applications in financial services, media, entertainment, and more. But Matt, tell us more about why developers choose Polygon over any of the solutions like Arbitrum, Optimism, etc. I think there's also like the advantage of first mover, but tell us more about this dynamic here.
Yeah, that's a great comparison to Fedwire, I think. Polygon really is aligned with Ethereum. So from the start, our mission has always been around scaling Ethereum for mass adoption. This is usually the part of the call where I show off my Ethereum tattoo. Yeah, when people first started building decentralized applications a few years ago, Ethereum was like the only place to do it. But we all saw what happened with gas last cycle. It became super expensive to the point where sometimes people were paying hundreds of dollars to get a transaction through, even though it wasn't like that complicated. And so we saw this coming at Polygon a little while ago and realized that scalability was going to be a challenge for Ethereum. And we, as lovers of Ethereum, we wanted to figure out the best way to help it scale. And so I think that sort of Ethereum alignment has really helped us to get a high quality developer community that are building really interesting applications that you can use together. So at Polygon, it's really all about, as everything in crypto, it's a social consensus, right? So if you have one set of really high quality builders building like the key like Legos on Polygon, then you can have other builders come in that can arrange the Legos into like interesting structures, right? So if you think about, we have very basic borrow lend platforms, very basic swap platforms, the key building blocks for DeFi and liquidity and NFTs and all of this. Then if you're like an interested builder coming in to try to build something innovative, you need to go to a chain where these things are already deployed and where there's like a high quality developer community that's familiar with the technology, that knows how to build. The other thing is the user base, right? So at Polygon, what we've really done, and it's a very interesting experiment, we've massively prioritized mass adoption, right? So you can see this through partnerships, through things like Nike and Reddit and Starbucks deciding to deploy their applications on Polygon. And we've really prioritized making the developer experience really good for those key partners so that Polygon is a place that they want to launch. And then if you're a user, and there was a partnership recently announced between Nike's .swoosh and Fortnite, where if you're a video gamer and you play Fortnite, you can buy your .swoosh like Nike NFTs, and then you can wear them on your characters in Fortnite. But you can also wear them within various like sports video games, right? And so you start to enable like true ownership of digital assets. But as a user, your entry point into the blockchain world doesn't necessarily need to be like in order to place a trade. It could just be to like buy a pair of cool digital sneakers as a collectible for your player in one of these video games. And then once you're here, you learn all of the advantages to that true digital ownership, and you start to look at all of the other interesting use cases. And so as a developer, I want to be on the chain where users are coming in. I want to be on the chain where people are having their first crypto experience and are getting into the world. And Polygon really has that sort of like core user community. And like you said, you can see it in all sorts of statistics. You can see it in the active wallets, which are definitely stronger than many other parts of the ecosystem than they were 2 years ago. Like our DeFi total value locked has performed like remarkably well. Our active wallets have performed remarkably well. Our developer community is stronger than ever, up 300%, right? You can see the Polygon strategy of making it a really great place to build, being super aligned with Ethereum, and then treating our community well has done really well. So those are like the less technical reasons why builders choose Polygon. On the more technical side of things, and this is where I think like we can get into Polygon 2.0 a little bit, it's about having the best in class technology, right? You mentioned like Arbitrum and Optimism. Those are great platforms, right? But they're just less secure. And when it comes to things like, especially like Colin and I are in the institutional space, security is everything in the institutional space, right? You definitely cannot risk like any user assets or funds being lost in like a bridge hack or something. The way I see it is like, one of crypto's key innovations was you have money secured by math. And for Polygon, we have Ethereum scaling secured by math as well through something called zero knowledge, which is way beyond the scope of this call. But what it allows us to do is to scale Ethereum in a safe way. So last cycle, a lot of people took a lot of shortcuts in order to like make more block space because there was such high fees on Ethereum and such demand for getting transactions done that a lot of people got priced out. And so you could take a couple of different approaches here. You can take the easy way, which was to, I think, optimistic rollups or side chains or whatever, which have much weaker security guarantees for the end user. Or you could take the harder path, work through all of the difficult mathematics and research needed to make zero knowledge technology into truly like end user experience. And so for that, we built something called the ZK AVM. So we went out on a massive hiring spree. We acquired a couple of teams, we merged with a couple of teams, and we have the best minds in the zero knowledge space working at Polygon, which is amazing. And it's a pleasure to talk to them every day. And so as a result, we've rolled out a version of the Ethereum like virtual machine, which basically what that means is as a developer, I can deploy my contract without any need for changes relative to standard Ethereum. So I don't need to think about taking other compromises, trying to learn a new programming language, trying to rewrite my contracts. And this is important for safety because if you have a contract deployed on Ethereum, you want to be able to deploy the exact same thing on the next chain because you already know that it's secure. It's been battle tested, right? So we use ZK tech in something called the ZK AVM, which is, I think, going to be the home for scalable like financial applications, right? And then we looked at this and we said, wow, like we really built a lot of technology here to enable scalable Ethereum, but this is just the start, right? The ZK AVM is just like one chain. It's one set of block space. And we have Polygon POS, which was our prior product. But sometimes we talk to people that want to build more complex applications. Maybe they need higher throughput. Maybe they need to be able to lock down the chain to just a set of authorized users because of regulatory reasons or whatever. Maybe they just want to have their application living in its own space where they can have a little bit more customizability. And for that, we have a product called SuperNuts. And this is like our app chain. And it's a little bit similar to Cosmos, but with the advantage of, this is where Cosmos has always had a little bit of trouble. They have great technology, but the users are just not concentrated in one location. And for Polygon, we see the mass adoption coming in through our existing chains, POS, ZK AVM, through our existing partnerships. And then for a developer that wants to build like a complicated like blockchain game, you can go to SuperNuts, you can have much lower gas fees, you can control your gas token if you want to have a different one, all while inheriting the same security guarantees that you get on Ethereum through ZK technology. And so the vision is we're going to live in a world with a lot of different chains. We're going to live in a world where block space is actually cheap and scalable and secure. And that's a vision of Polygon 2.0, is we're going to have all of the different chains secured by like Ethereum at the settlement layer, like the Fed wire that you're talking about. And then we're also going to have it secured by staking of MATIC through the staking hub, where you can have more like capital efficient staking. And so you get this sort of like double security guarantee. You get security provided by MATIC stakers at the staking level for just consensus at the sequencer, like level 1, right? To make sure that you still have true decentralization all the way through in a way that you don't in a lot of other solutions today. So you get like staking security at the layer 2 level, and then down a level at the layer 1, you get Ethereum security. So it's truly like best in class, decentralized, secure computation. And it's a beautiful vision. The other thing, I guess, while I'm on my Polygon 2.0 rant, is liquidity. So liquidity winds up being very scarce in a world that has a lot of different chains. You face this sort of like liquidity fragmentation problem where users have to either bridge their assets, which involves security risks, or they have to check it in and out from the layer 2 contract. And that's difficult. The same sort of network effect that makes Polygon successful through our developers and our users, that also applies to liquidity. If you're going to be doing financial applications, you want to be deploying them in a place where liquidity is available. And so one of the functions of Polygon 2.0 is we have this sort of unified liquidity layer. And thanks to zero knowledge technology, we can finally do it safely, where we can safely transfer assets between 2 chains in a way that like bridge hacks lost, I think like over $1 billion in 2022 alone. We don't want to see that repeat again. That's not a good user experience. That's not good for anyone. It's not good for our industry. We want people coming into crypto because they care that their money's actually there. They care about true digital ownership. And you can't have that with a custodial bridge. So with zero knowledge, we've created something that we're calling the 𝕂𝕂𝕂𝕂 bridge. It's called a whole bunch of different things across the Twitter sphere.
Yeah.
But
Going to the audience more in the layman terms, what it means here, because when we evaluate tech companies, one of the key differentiator across a social network, for example, company like Facebook and Instagram and others, is the network effects, right? Like the number of users and how sustained that is to create revenue. But here in crypto, we have both. We have the network effect that is multi-sided with the developers that actually build these companies, these blockchain native companies on the operating system, could be Polygon and another one. And then we have the end users that actually love the product and services that these developers and entrepreneurs build. But on the other end as well, because essentially crypto created a network of value instead of a network of information like TCP/IP, basically liquidity, as you mentioned, is equally important as network effects. And I think it's like going hand in hand with network effects because users are putting in the capital into any kind of use cases. It could be acquiring, identity over the blockchain. It could be accessing insurance, accessing service securities, etc. So I think what would be interesting to see is how would you evaluate down the line these blockchain native companies built on Polygon? And also, do you think that Polygon, especially like the new version of Polygon, as you mentioned, that would be interconnected with anything that is compatible to Ethereum, do we think that down the line, like any other solutions that we see in the market, Stockware or ZK Sync, that may explore anything that is not compatible with Ethereum as well, Bitcoin, right? Where you could have also applications built on Bitcoin. Can you tell us more about, first, how would you evaluate blockchain native companies in your perspective as a research analyst? And then secondly, do we think that Polygon would expand to Bitcoin, for example, which is arguably the most secure Fed wire at the moment?
We're still in the very, very early days of all of this, right? Like we're looking at blockchain native companies the way that people were looking at internet companies in like the early 90s, not even like late 90s, right? The level of change that crypto and blockchain bring to this world is so fundamentally powerful. And it's just such a paradigm shift that we're only seeing just the first traces of all of this. So it's very early to try to think of things through like a one-size-fits-all framework. And I think that's one of the reasons why traditional investors struggle a little bit. I had issues with this when I came into the crypto world, right? Where I was looking at everything through this lens of things functioning like they do in the equities markets. And in reality, it's very different. In crypto, a lot of things are reflexive. When things go up, they go up more. When things go down, they go down harder. And that in and of itself is a network effect. When Instagram gains one user, they really gain like more than one, because if your friends are on Instagram, you're more likely to join Instagram too. And so I think the bright side is that like you can track all of these metrics in crypto in real time, right? So if you go to tools like Dune or Dune Analytics or like Nansen, or really there's like great accounts on Twitter that like all they do is analysis on these platforms and then they post them to share with their audience. Like you can see in real time how many transactions are being done on any of these protocols, on any of these chains. And that to me is just like groundbreaking in terms of the transparency, right? So you have this challenge of non-traditional business models, trying to understand like valuation. Can I apply the existing valuation frameworks the way I think of the world to these things or not? But you also have this huge advantage of once you've figured out how you're going to measure success for a given protocol, then you can track it in real time, like easily, which I think is super interesting. To answer your next question around interoperability, right? I think 2 cycles ago, there was a lot of question around like what the right structure was going to look like for a smart contract platform. And you started to see all of these alternatives, things like EOS and Cardano. Maybe there's a different programming language. Maybe there's a like UTXO model, the way there is in Bitcoin. It's a little bit like evolution, right? Where it comes in waves. That was like a Cambrian explosion of who knows what the future structure is going to look like. And then we saw a consolidation period where the Ethereum virtual machine and the programming language Solidity and all of the sort of applications that work on Ethereum compatible chains, that sort of started to be where the innovation is. And in an early industry like this, it's a little bit like any technology standard, right? As soon as you get that sort of core gravity to hold all the particles together, that becomes like a momentum that's very difficult to break. And so at Polygon, we're like thinking about it in 2 ways. The first is that the EVM is necessary. It's big enough now. It's like Windows. Like that operating system is not going away. And when you see developers, it's easier to get talent in a space like that. It's also easier to get things like audits done in a space like that. You just have way more people that are knowledgeable about it. But at the same time, we don't want to stifle innovation, right? Because this world is so new. It's easy to forget because every day feels like a year. But we've only been in this space for a decade, maybe 15 years, if depending on where you want to like market. There's still so much to be unlocked, and there's still so much technology being built. So we're working on things like Polygon 𝕂𝕤𝕞𝕖, which is like an alternative virtual machine that has some interesting properties. We still have a large amount of research ongoing in what the best way is to apply things. And Starkware and all of them, they're doing great work. Cairo V1, I've heard is a really nice programming language. I just think that network effect is really hard to overcome. And so I think like we got to keep building for the EVM because that's tried and true. And when you see like a financial institution, they're not targeting things that are like niche, right? They want to target things that can interoperate with other applications. They want to target chains where like the users already are and where the wallet infrastructure is good and all of that. So yeah, it's a really interesting point of time to be working in the space for sure.
No, I couldn't agree more. And I think one of the core theses that we have within the research team at 21 Shares is that essentially the infrastructure of crypto is going to become invisible. And this is when we're going to cross the chasm and see more of these consumer-facing applications, whether it's like decentralized exchanges, when you're basically using, for example, Uniswap, whether it's on Ethereum or Polygon, you're not even realizing that this is a blockchain-powered application. When I download that now on the App Store, I don't even realize that this is actually built on the blockchain. And I think that's one of the most powerful user experiences where people don't even need to figure out what they're using today, as you mentioned, with the interconnection between all the layers or app stores or operating systems connected to Ethereum. And I think when you look at the patterns of many entrepreneurs that build internet native companies, and what they want to do is making sure that they can actually build up revenue, right? So they don't want to have only the applications available on the App Store or compatible with iOS, but they actually want to also have their compatible solution with anything that is beyond just the iOS operating system. So they would basically have the application available on Google Play and the App Store. And we're going to see a lot of that as well for different reasons by the entrepreneurs to choose different layers. And I think like one of the biggest bets for Polygon would be to be basically the protocol of interconnected value underneath it. And I think that's a bold vision, but definitely a bright future for Polygon for sure. So I'm conscious of the time. I'm going to pick up some of the questions that we have from the audience. So we have one from Daniel. Daniel, thank you for joining. Thank you for your time. So the question is, could something like network congestion become a problem for Polygon as well if we onboard billions of people?
This is the curse of success in crypto, right? Is as soon as you become useful, you have too many people trying to use it. I think this is where Polygon 2.0's vision really excels, in my opinion, is if it becomes too congested on one chain, it's very easy to spin up more block space on another, and they have unified liquidity. And to your point, Eli, the idea that I, as a user, can use an app and not need to know where my transaction is actually taking place, I feel like it's only really unlockable with safe, secure interoperability, because otherwise, like, you make a lot of security assumptions. And the downside of not knowing where your transaction takes place is you also don't necessarily know where your assets are. And so being able to use Polygon technology to have that interoperability across chains, what that means is now block space is fungible, right? Like, you can make infinite, secure, scalable block space that ultimately settles down to Ethereum. And so this is why I think in terms of congestion, it's not going to be an issue. And what I also think is when you get that cheap, scalable block space infinitely, you can have more interesting applications. We've been a bunch of developers trying to build applications for one or two servers. And what Polygon is really trying to do here is to become the AWS of decentralized compute, where we have lots of different products for lots of different use cases. And if you're a developer who has just like a little idea, you no longer need to invest in like your own server in your office building somewhere. You can just press play and the blockchain spins up and it's all abstracted away from you. So this is like why I'm so excited about Polygon 2.0. It changes the way that we think about block space from a scarce asset to a rich, reliable, plentiful asset.
Yeah, no, I couldn't agree more. So we have another question. How do you cope with the current regulatory scrutiny in the US? Do you think MATIC should be considered as a security?
You can go if you'd like, Matt.
Why don't you go ahead and I'll just add my 2 cents at the end.
The short answer is this. There are paths forward within the current regulatory infrastructure that do not obstruct the technology. So generally, we go with that. Do we think MATIC is security? Absolutely not. If you look at the Howey test and you look at what it says in regards to decentralization and the idea that value is created based on a specific subset of actors, we would argue strongly against that. And that's the short answer. I realize there's a ton of questions. I don't even know if we're going to make it through, but I'll keep that one short for now.
Yeah, sounds good. The next one is, as Polygon 2.0 envisions Polygon protocols to turn it into a unified protocol, a highly scalable network of ZK power layer 2s, does that mean that Polygon would be competing directly with layer 0s like Cosmos and Polkadot? And do you think interoperability will take place on layer 2s instead of just layer 0s?
So yeah, so Polygon 2.0 is this like interoperability of layer 2s. But I think in terms of competition, I would say that we're so busy trying to just build high quality technology for the builders out here that it feels a little silly to try to categorize yourself against playing against one person or another. We're still very early. And I think that there's a good chance that someday we see like a Polygon layer 2 that has IBC enabled to collaborate with Cosmos. We're in a space where the pie is growing so rapidly that it's better to have friends than competitors. So yeah. And then I think thanks to ZK technology, I think over the next couple of years, I think we're going to really start to question what's a layer 2, what's a layer 1, what's a layer 0, and where all these pieces fit together.
Yeah, absolutely. And by the way, if you guys are confused about all the layers in crypto, we made it easy at 21 Shares with our global classification standard with CoinGecko. So check it out on our website or also on the CoinGecko website, coingecko.com. You will find our classification standard where we make it as easy as possible.
It's really nice. It's a great product. I've used it personally. It's really good.
Cheers. Thank you. The other question is, can other layer 2 solutions like 𝕰𝕰𝕁 and ZK Sync be part of the Polygon network? The short answer is yes. So we can move on to the next one. Can you expand more on Polygon's cross-chain messaging protocol? How will this be different from Cosmos and the other solutions out there?
Yeah, I would think of it somewhat similarly to IBC, just with the key addition of using more ZK to make it more secure.
Yeah, that sounds good. And I think one of the most important things to remember here is that their technology is to some extent open source, so people can use it and build it. But what matters is the developer adoption and then the end user adoption that would dictate the success of any operating systems leveraged by blockchain technology. Last but not least, we have another question, which is, what is the impact of Polygon 2.0 on the token MATIC?
So Colin and I, being based in the US, don't really have a lot of insight into the token plans, but Polygon, I forget which day exactly, but in the next couple of weeks, we'll have an update on the token. And the short answer is like the current MATIC token was designed for one chain and the world has shifted pretty substantially. So I think it's only natural for that to reflect in some kind of update to the token model. But yeah, I can only speculate until we find out together with everyone else.
And I know that I don't want to spoil the surprise, but next week you're going to release your token economics, right?
I think so, yeah. We have this sort of roadmap on
our website. So the roadmap. Yeah. I believe it's like over the next couple of weeks, there will be some clarity there.
Yeah, absolutely.
Guys, we're already at time. Thank you so much for your time, Colin and Matt. That was fantastic. For the audience here, thank you so much for your time as well. We hope you enjoyed the session. If you have any questions to the Polygon team, feel free to reach out as well. We'll be very happy to connect with them. But most importantly, guys, you're going to receive the recording of this session. It's going to be also available on our YouTube channel. But again, thank you so much for attending, and we wish you guys a wonderful day. Colin, Matt, that was wonderful. Thank you so much.
Thanks, Eli. Pleasure.
Bye-bye, guys.